In today's session of Market Movers, we will be taking a look on the USDJPY, which has consolidated well closer to the 104 levels, and now it has rebounded, and increasingly it is looking like that the trend reversal is underway, and we are likely to see the bearish momentum which was prevalent in the USDJPY till last week coming to an end, and we might see the reversal from the this bearish zone, and in coming days we might even see the USD climbing successfully above the 105 and heading towards 106. Of course, tomorrow the US presidential election will be coming to an end, and afterwards during the counting and when the results will be declared, we are likely to see a lot of volatility. So this week is going to be eventful, and we also need to be mindful of that. But as the things stand on the technical fronts, the reversal looks imminent. So let's see how things will unfold during the week. If we take a look on the data docket, it's all about the PMI releases for the major economies of the world, starting from the Australian economy, then later on the China's PMI numbers, and even during the European trading hours, we have got the final PMI releases for France, Germany, and Euro area as a whole. Even in latter part of the day, we are scheduled to get the US ISM manufacturing PMI numbers. So here, if you go into the details of the China's PMI release, we are seeing one of the best numbers for the decade, and the Kaixin manufacturing PMI has risen to 53.6 for the month of October, which is its consequent, or you can say for 6 months, it has been on the rise after the coronavirus-induced lockdowns was revoked, and for this month, it has improved. And now the manufacturing sector, you can say, is enjoying one of the best growth period for this decade. So the Chinese economy has rebounded well, and it is acting as a growth engine of sorts for the world economy, as the major other economies are only struggling. And now for the euro area, again major economies are announcing lockdown. So for next couple of weeks or months, the economic activity is going to come to an standstill. Not exactly standstill, but it will be a lot lower compared to what we have seen for last couple of months. So that is also going to cast an negative or adverse impact on the economic parameters, which will be released subsequently. Now, for the time being, if we use the prior data, we have some good numbers for the euro area, and for the month of October, the euro area market manufacturing PMI was revised higher to 54.8, and even if we consider the other major economies, the manufacturing PMI numbers have been revised on the higher side both for the France as well as for the Germany, and even the Italian numbers are good and pointing to the expansion. But as I said, these PMI readings are not likely to be sustained if these new coronavirus lockdowns suck the life out of the economic activity. So we will have to keep that in mind. Later in the day, we are scheduled to get these ISM manufacturing PMI, and here also the robust expansion is expected for the month of October, and we might see the reading even above the 55 level. And for this month, the expectations are that we might see the ISM manufacturing PMI inching closer to the 56. So let's see how this will shape up once we get the data. Now moving on to the technical outlook. In today's session, we will cover the USDJPY in the currency is segment, and then for the equities, we will be taking a look on the S&P 500 just ahead of the US elections. Let's start with the USDJPY's technical outlook first. This is the daily time frame chart, and this is a key area of support for the USDJPY is again providing some buying momentum for the USDJPY. And after getting close to this 104 level, the reversal has been fairly sharp. And even in today's session, we are seeing substantial buying momentum in the USDJPY, which has pushed it pretty close to the 105 level. So here we are looking at this possibility of this upward momentum lasting, and we are expecting the USD to even inch toward this next resistance line, which has been formed simply by joining the prior swing high. And of course, on the high side, the formation is of lower highs, whereas on the bottom side, we have seen the 104 zone acting as the near-term support for last three occasions. This time around also has been no exception, and we have seen good amount of buying coming in closer to this support area. So if we use this support base for the USDJPY's current price action, I think we can expect the USDJPY to break above this immediate swing high, which is just slightly above the 105. Of course, we have this resistance inside in the form of central pivot point of this month's pivot point series. So it will be interesting to see if the USDJPY is able to cross and hold above this central pivot point in today's session. If it is able to do that, I think, as I said, the case will be a lot more stronger for the continuation of the upward momentum in the USDJPY, which can provide us the possible targets closer to the 106, as we don't really have any strong resistance inside till this first resistance of this month's pivot point series. The regression curve remains steeply bent on the lower side, as we had this fall in the USD valuation, which started close to 106 and pushed the USD closer to this support area. But now the buying momentum has come back, and it is increasingly influencing the price action in the USD So if we want to trade on the USD I think it will be preferable to look for the buying opportunities in the USD as long as it is holding well above or closer to this 100 SMA. Right now, the price gap is almost 50 pips, which is almost half a percentage point. So it will be quite a effort for us to find the buying opportunities in today's session, unless and until we see some sort of correction taking place in the USDJPY, which might push the USDJPY bit in the correction territory and closer to the support zone. Unless that happens, the risk reward ratio is not going to be favorable. If we go for the long trade straight away, then we will be exposing ourselves for a lot of risk, as I don't really see any big stop loss in sight uh, closer to the current zone. The only stop loss I think which can be utilized is going to be closer to these immediate pardon me immediate support level closer to this prior swing low, which is there around 104.10. And if we want to use that price zone as our stop loss, then we will have to of course try for the entry closer to that point of stop loss. And I think this confluence zone of 50, 100 and 200 SMAs, which are converging closer to the 104.5, can be considered as our safe entry point here. And for that we will need almost like 40 to 50 pips correction from the current level, and that is going to be a tough ask for the entry point in today's session. But in the market we never know. So if we get fortunate enough, if we see some sort of correction taking place, and of course due consolidation also after the correction, only in such a scenario we will be able to go for the fresh trade in the USDJPY with the optimum risk reward ratio. Even now the momentum is fairly strong, and you can even expect this continued rally to break above this immediate swing high, which is there just little above 105. So that possibility is there, but if we want to go for the fresh trade, I think we will have to be patient, and in due course of time, we will also have the 50 SMA crossing above the 200 SMA. So that will mean that the golden cross is also going to be in place for the confirmation of the buy trade in USDJPY. Now moving on to the S&P 500, it's going to be an interesting week for the S&P 500 as we have the US presidential elections lined up, and a lot of volatility is of course expected. Today's session might be rather subdued as in the run up to the election not many people will be too keen on adding big positions, and after the initial trend becomes clearer of who is leading, sorry, and who is trailing in the elections. By tomorrow, we will have more clarity and, of course, subsequent volatility as well. Purely from the technical perspective, the S&P 500 is holding close to these prior swing low and the prior swing high, which now providing decent support closer to the 3200 area for the S&P 500. Here for today's session, the S&P 500 has rebounded well and it is inching closer to the 3300 zone. So it's like consolidation on the lower level closer to the prior swing low, which is acting as the near term support. But we can't really say any turnaround is going to happen in the S&P 500 anytime soon. This is more of a consolidation phase, and we have to be mindful that there is strong resistance on the upper side closer to this month's central pivot point, and considering that, it will be better for us to keep looking for the short selling opportunities even in the current scenario where we have substantial fall in the S&P 500, and moving forward we can look for fresh shorting opportunities if we get the entry point closer to the major resistance zone. The regression curve is of course pointing in the southward direction, that is on the lower side bearish momentums are still holding well in the S&P 500. All we need now is a good enough entry point after due consolidation which will cut down on our possible losses in case we happen to be wrong, and increase our profitability or profit in case we happen to be right. So such a scenario, I think, is going to be playing out in these crucial price levels. We have the immediate resistance in place around 3360. We have these prior swing lows, and also, as I said while explaining the 4 hourly chart, we also had the central pivot point of this month's pivot point series. So both these factors are likely to provide resistance to the price action in S&P 500, and as is the case today, we have the subdued price action taking place where the range has been fairly narrow for the S&P 500, and on the lower side we haven't really seen strong buying momentum, but the price action is holding closer to the support area. So instead of getting involved right now straight away around the current price zone, I would say that if we get some sort of retracement on the higher side, and as and when we get the S&P 500 closer to the resistance level, we can indeed think about going in for the fresh shorting opportunity. But as I said, the volatility is going to be a lot higher in next couple of sessions, so we have to watch out for that as well. And whenever we go for any trade, whether short or whether long, we will have to be mindful that because of increased volatility, it will be better for us to reduce the lot size, and then try to keep the risk constant, as the tomorrow's session is likely to prove a lot more volatile, and you can even see or say that this is the calm before the storm, as this week is going to be fairly busy on trading for the both sides. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.